EricMother.com for the weekend of January 23rd and January 24th, 2015. With about 15 minutes to go, let's take a look at how US markets are closing on Friday with a nice gain. Let's call it about 1 to 2% on the major averages. So let's take a look at the chart so we can see what markets are planning to do or might be doing in the short term. If we take a look at the Nasdaq, we can all see that the Nasdaq has yet to break the lows of intraday lows of 2015. We all know that failing to break these lows might be a sign of support. Of course, we shall see in the short term, but for now we can assume that that's good enough action, market showing demand and not breaking the lows of last year. If we take a look at the Nasdaq, and this is the 5-year weekly chart that we've been following, so 5-year weekly, and here we've been looking at the RSI coming back to test the previous line that has been support. So since 2011, if you draw the line right there, you can see that we've been watching this because the market's been coming here and bouncing. So this line has been a simple way of determining whether to get back in the market after pullbacks over the last 4 years or so. All this have led to nice bounce in the market, nice re-entry during all these support periods. Even here we moved back above that line for a nice re-entry for a swing trade, and you can see that if the market can put together a couple of weeks to the upside and recapture back above that line with uniform action, that might be good enough to start moving the market higher. As of Friday's nice gain, the Nasdaq up about 2.5%, reason being that the Nasdaq moved from being below 30.9 and is now moving above 30.9. As we've been discussing, every time you get a move above or below this threshold, you get to have some type of a strong reaction. Here the reaction is to the upside, which is my reason why the market might be staging a nice move. Also, we can see that there's a line here. If you take this break, slight break here, the beginning part of 2016, and draw a line, you can see that with Friday's move, we are coming back to back test this line here. If the market cannot move above that level short term, that might be good enough for a day-to-day pullback. Now let's take a look at the Dow weekly, and we can see also the Dow managed to hold above August 2015 lows. So that's good support right there. At least the market did not break those. So we can say that's not the worst thing that could happen. That seems like good enough action. Now take a look at the charts here in terms of making lower lows on a weekly basis, and yet we see that the RSI made a slight improvement. I think that positive divergence is something that if you're looking to find reasons to suspect the market wants to go higher, or if you're playing the market long, that's a reason to watch that. Of course, it remains good as long as the market does not come back and break that. Of course, if it breaks that trend line, then the markets are still going to have to see lower prices. Now, after Friday's nice gain on the Dow, 210-point gain at the close there, we can see that if we take a look at where the break in late December took place, somewhere there, which is off the highs here at about 17,700. Since then, the market has come back now to test that break level, and it is where the market is trading as of Friday's close. So we are looking at the market closing the week back at 30-minute resistance. It will not surprise me that because of this resistance, that the next move in the market is going to be down, unless, of course, the market can clear that current resistance on the 30-minute chart for the Dow. Right now, it looks like we close at resistance. It would only make sense that we respect that resistance for now. And if we do respect that resistance, generally speaking, we are looking at markets that should be trending lower as we begin the new week. Let's take a look at the Dow Transports, and we begin by taking a look at this nice gain on Friday. And now we see that it finally did move above 30.9 on its daily time frame, which might explain that nice gain on Friday. As you move above 30.9, you get a nice move higher. As you move below 30.9, you get a move lower. Now the thing here to understand is, because we spent about 2 weeks, close to 2 weeks and a half below 30.9, generally speaking, and I'm just saying generally speaking, what this tends to suggest is that yes, you can recover in price but because you spend a lot of time here, you're going to eventually have to break and at least test the lows or break them so that you can eventually form a positive divergence. Hope that makes sense. In other words, if we are going to form a positive divergence based on this chart, something like that, then the only way that happens is if the market goes higher, comes back, makes a fresh low, and while it's doing that, we have an improvement in the RSI action. So the only way you form a positive divergence if the market makes fresh lows. In other words, let me repeat that. In my opinion, because we spent a lot of time below 30.9, more than likely we might rally, yes, but eventually we might have to test this recent lows. So all to say that this market remains questionable in my opinion. Take a look at the recent break coming in 2016. So this break is where the market has rallied back to, right? You can see that line there. We've come back to that red line, which is a problem for now. Also, take the highs or the line connecting the highs on the daily RSI for the Dow Transports, and guess where it ends up? Ends up exactly where we closed on Friday, which we should not be too surprised that coming into the new week that the market has a problem as long as that resistance is what is being taking place. If we take a look at the hourly for the transports, you see two lines. One line connecting the highs like that, right? So it connects the highs here in November, highs of late December, and now where it closed after Friday's early morning highs. So until it can break out above this line, we can see that this market continues to struggle on a short-term basis. And of course, if we can clear that line, then the market might have a chance of moving higher. But for now, we did show resistance. So let me draw that again. You can see that this connects nicely with the highs. At the morning highs, the market hit that level and pulled back. Also, there's another line on this hourly chart for the Dow Transports. And if you're confused, if this chart looks different from yours, it's because I'm using RSI period of 26. So that's the RSI setting on my hourly and 30-minute charts. Here we can see that if we take a line somewhere around there, this line was from this break point in about December 28th. We broke through here for the highs there. We hit that line twice. So that's the red line. Let me draw that again so you can see it. We hit that twice, which was here. We haven't been back to those levels, and you can see we are showing resistance again there. If you back test the same red line and go backwards to see what happened in the past, you see that it broke down here for the highs coming into late November. So this line is legit, and we seem like right now we are seeing resistance on that line. One should continue expecting a pullback. And of course, we should not forget to mention that on the monthly chart, the biggest risk to this market is, as you can see on this monthly chart, we haven't seen any monthly improvement. We are still trading at fresh monthly lows here after the break in December. RSI is trading at 3-year lows. RSI is also moving up below 38.2 on the monthly. And the MACDs continue to be bearish because we are moving to fresh 3-year lows. So month to month, we haven't seen any improvement on the monthly chart. So the risk is still there that the market looks broken as far as the monthly chart is concerned. Take a look at the S&P 500, and just like the Nasdaq, we made a fresh weekly closing low last week, but we have a slight improvement on the RSI. Now on the weekly chart, this RSI support is coming at about 38.2, which is good support for now. And over time, this could actually set up the market nicely for a potential week-to-week bounce. We shall see. Now, unlike the Dow and the Nasdaq, you can see here that the S&P 500 broke to fresh lows intraday, but has not closed below this intraday lows of 2015. So really, it's not that bad of a picture because we did not close on a weekly basis below 2015's intraday lows. So I don't think it's a bad as it might seem. This is good intra-week reversal, I would say. Looks okay on a week-to-week basis. Now let's take a look at a 5-year weekly. And 5-year weekly here, we can see, just like we did show on the Nasdaq, the level to watch is if the S&P 500 can put together a couple of weeks to the upside and show support on this line. Why? Because this is where it's been bouncing since 2011. It's been coming back to test this green line and holding. Did that in 2014 for the lows there. It recaptured back above the green line for the re-entry there for a swing trade higher. And now if it can move back above that green line with uniform action, then that's going to be what the bulls want to see. Take a look at the daily for the SPX, and I think what's happening here is we are coming back to test this break level. So there was a break point here in January, and the market is coming back to test that break point. If it can move above this red line, which is now being tested, that's going to be bullish. Otherwise, if we see resistance on the red line here, we might have to make fresh lows for the short term. Take a look at the S&P 500 on the hourly, and we come back to this level here where it's been stalling. Right there, you can see there was a break there. That break began with this move in December, the highs there. Eventually there was another break, which was in late December for the highs there. And now we are coming back and we are at some point testing that. You can see that clearly on the 30-minute chart for the SPX, coming back to test this level here, right there. And that was the break point on the S&P 500 in late December. So we broke that level. We've come back after a couple of weeks and are testing that. So if we show resistance here, then the next swing trade is lower. If we break out above that red line, then one can speculate that the next swing trade is high. And since we close at the line, of course, we have to wait and see which way the market decides to go. If you are looking for a reason to be bullish, here's one good reason. Right now, we are looking at the VIX having failed to hold above 28.03 for the VIX. So the VIX has failed to break out on a weekly time frame. We've tried for 2 weeks and failed. So this to me is one of the most bullish charts you can find, because additionally, this is where the VIX has been stalling on the weekly chart. Every time the VIX over the last couple of years would hit this level, the market would be a buy, just like we did here for the back below the red line, resistance on the red line for the highs there, double top there for the highs there, resistance here for those highs. We broke down below the red line here for the highs somewhere here, and then even here the market gave us a buy signal when the VIX stalled, and now we are stalling again. So if you are looking for a reason to be bullish, I think this chart here summarizes why you should be bullish. Again, if the VIX can come and take out 28.03, maybe we can change our mind. But this chart by itself, in my opinion, is, in a way indicating that the market might actually not be as bearish as it looks. So this line here is a problem, and we also failed to hold above 28.03. So the VIX, in my opinion, looks a little bit questionable. And if the VIX is not strong, then of course the question becomes, does that mean that the market is a buy? And if I was given this chart by itself, nothing else, I would say the market is a buy. But we shall see if the market can clear the current resistance levels that we've been discussing on the 30-minute chart for the most part on the SPX. And again, so let me just go back to that S&P 500 30-minute chart. Just give me a second here, and I can just summarize this. Is really short term what the market needs to do. It needs to decide whether it can move above this resistance line right there. This line, which was the break line, that's the hour. Let's go back to the 30-minute chart, so bear with me. So let's take a look at the 30-minute chart. If the market can clear this resistance line here, then that's going to indicate that the VIX is telling us that the market is about to move higher. Otherwise, if the market can move above the red line, then short term, even for now, we are still looking at a market that wants to go down. And then I want to conclude here by taking a look at the monthly charts, and we can see that irrespective of what the other time frames are saying, for now, in the month of January 2016, the market is still giving us a sell signal here on the S&P 500, sell signal here, also suggesting a big down month, which is what we've been getting so far. Why? Because SPX is moving below 50, as you move below 50, you get a big washout. And as of right now, we are still looking at the S&P 500 trading at 3-year lows on the MACDs. So month to month, we are still looking at markets that are still bearish. And so maybe those hourly charts are telling us that the market might still go down. So until the monthly charts can change, month to month, we have to respect the potential for even lower prices. Eric Mwathe, Mwathe.com. As always, good luck, peace, and blessings. EACS.